tunayo benki inayotufaa sisi wateja na wafanyikazi, tuko pamoja, lengo letu moja, kuyaboresha maisha ya watu, kujitolea kwa huduma bora, kuendelea kwa uaminifu, kuhudumia wote kwa furaha. Equity benki inayotujali. Benki yangu, benki yako, benki yetu ni Equity. Ni benki ya watu wote, ni benki inayotujali. Ni benki inayotujali.
Ee Mungu, nguvu yetu, ilete baraka kwetu, haki iwe ngao na mlinzi, na tukae na udugu, amani na uhuru, raha tupate na ustawi. Amkeni ndugu zetu, tufanye sote bidii, nasi tujitoe kwa nguvu, nchi yetu ya Kenya tunayoipenda, tuwe tayari kuilinda na tujenge taifa letu. Ndio wajibu wetu. Kenya istahili heshima, tuungane mikono pamoja kazini, kila siku tuwe na shukrani.
Esteemed shareholders, board of directors, management, staff of Equity Group Holdings PLC, ladies and gentlemen, I welcome you to the 17th Annual General Meeting of Equity Group Holdings PLC. My name is Professor Isaac Macharia, the chairman of Equity Group Holdings PLC Board of Directors. I will now ask Bishop Dr. Charles Kariuki to start us off with a word of prayer. Bishop Kariuki.
Thank you, Chairman, and a very good morning to all the shareholders. Shall we pray? Our Heavenly Father, we want to thank you this morning, and we want to bless your holy name even as we come before you. Thank you for giving us yet another day and a blessed day. Lord, we are here for our 17th annual general meeting. How we ask you to join us and be with us. May you stretch your blessing hand upon this meeting and let this annual general meeting today be a success. We bless you and thank you for all the shareholders, wherever they are. We commit them unto your able hands, that together you bless us as you guide us through. We call upon your blessings, your peace, and your favor, even as we have the facilitation of this annual general meeting. Blessings and glory to your name, for you are with us. For this we pray in your holy and precious name. Amen. And back to your chairman.
Shareholders, today I'm joined by your directors and other officers of the company, some physically and others virtually. Allow me to introduce those who are present here with me in this live stream. On my left, Dr. James Mwangi, Group Managing Director and CEO. Next to Dr. Mwangi is Mrs. Mary Wamai, Group Executive Director. On my far right, Mr. Brent Murray, Group Director, Strategy, Strategic Partnerships, and Investor Relationships. Next to me, Ms. Lydia Dirango, Group Company Secretary. And lastly, but not least, the representative of our external auditors, Mr. Richard Jeroge. Shareholders, we also have other members of the board who are attending this meeting virtually. Mrs. Evelyn Rutuangeda, Non-Executive Director and Vice Chairperson. Dr. Edward Odudo, Non-Executive Director. Dr. Helen Gishohi, Non-Executive Director. Mr. Vijay Gidmo, Non-Executive Director, and Mr. Christopher Newson, Non-Executive Director. Esteemed shareholders, I will now call upon the Secretary to report on the registration and confirmation of shareholders and to confirm the presence of a quorum.
Thank you, Chairman. I confirm that a total number of 4,365 shareholders holding a total of 1,957,284,522 shares, representing 52%, have registered for this electronic AGM. The quorum for an AGM under our Articles of Association is 2 shareholders present in person or by proxy, representing not less than 1,257,891,601 shares of the issued share capital of the company. I therefore confirm that we do have a quorum for this meeting. Thank you, Chairman.
Having confirmed that we have a quorum present, I declare the meeting to be properly convened and duly constituted. I now call upon the Secretary to read the highlights of the notice and agenda convening this meeting.
Chairman, I confirm that the notice and agenda of the meeting, as outlined on pages 13 to 15 of the integrated report, was published in the Daily Newspaper, the Daily Nation, and the Standard on 26th May 2021. Additionally, the notice was published and is on the company's website. Chairman, I will take the notice as read by the shareholders since it's already on the website. Thank you.
Ladies and gentlemen, we will now commence the formal business of today's meeting. Shareholders, the 2020 audited report and financial statements were made available to all shareholders through a publication in the record dailies, and the full report was made available on the company's website as indicated in the notice convening this meeting, which was published on 26 May 2021. Shareholders, my report to you for the year ended 31st December 2020 is contained in the integrated report on pages 17 to 20. I shall take the report as read. The integrated report remains accessible on the company's website. I encourage all shareholders to read the detailed statement for information. I will only give a few highlights of my statement. Dear shareholders, I became chairman of the Equity Group Holdings in 2020 in the middle of an unprecedented COVID-19 epidemic, which, though initially a global health crisis, quickly developed into a major socioeconomic crisis with shrinkage of economies and loss of jobs. I thank the board and the shareholders not only for the confidence you showed in me, but also the opportunity to work with all our stakeholders to continue bringing the purpose of this organization to life. While the chairman's report is covered in detail in the integrated report, I wish to highlight a few of the issues that preoccupied us in 2020. Over the past 1 year, our strength has been tested and found to be very solid. The board, working with management, had to make certain decisions that at that time may have appeared drastic, like withholding dividends, but which were well informed by lessons that were learned from studying previous global epidemics and crises. Chief among these lessons was that recovery after epidemics and global economic crises usually take time. We therefore needed to strengthen both our capital base and our liquidity position, not only to ride through the crisis, but to be ready to bounce back at the end of the crisis. During the crisis, we were not only able to support our customers through the crisis, but the business thrived as evidenced by the growth in assets to breach the 1 trillion shillings mark. It was during the pandemic that we acquired and merged with the oldest bank in DRC, making Equity BCDC the second largest bank in this high potential market. Our strategic response to a crisis that was underpinned by our corporate philosophy of transforming lives and livelihoods, giving dignity and expanding opportunities for wealth creation, enabled us to create value for our shareholders, while at the same time creating social and environmental value for our stakeholders. Our support for frontline healthcare workers by providing PPEs throughout the country was unprecedented and was made possible by generous donations totaling 1.7 billion by MasterCard Foundation, Equity Group Holdings PLC, and the family of Dr. James Mwangi. We are grateful to our development finance partners who, as a mark of confidence in our business model, provided the Tier 2 capital to the tune of 11 billion shillings that enabled us support SME businesses in the region. The protocol introduced by the government to stem the spread of the pandemic had a positive impact on adoption of technology, both in delivery of services to our customers and in our business operations. Going forward, This adoption of technology will not only allow us to scale the business, but will also have a significant effect on costs. On matters governance, realizing the growth in complexity of the group, the board continually strives for improvement as we perform our risk management and strategy formulation roles to ensure optimal financial performance, coupled with significant social impact to the communities in which we operate. We have overhauled our corporate governance framework to strengthen governance policies and enhance accountability and transparency to all our stakeholders. We have brought into the various boards new board members to increase the diversity and skill sets necessary to support management in developing appropriate strategy and provide oversight. In addition, being cognizant of evolving global and regional business trends, emerging challenges, and risks, we have recruited appropriately and in the process have developed a highly skilled and competent team. We have focused on establishing and cascading succession management throughout the organization in a manner aligned directly to our strategic and risk management objectives. The investments that we have recently made in our subsidiaries have shown strong signs of paying off, with the proportion of income contributed by these subsidiaries increasing year on year. This will positively impact on the return on investment for shareholders. Given this growth and resilience, we anticipate the business will go back to a dividend payment path. We are committed to align to the targeted dividend policy of between 30% to 50% of profit after tax. In addition, the resoluteness and competence with which CEO Dr. James Mwangi, management and employees of Equity Group have faced the crisis created by the epidemic indicate that the group is poised to be the leading financial services provider in this region. We commend all those that have worked hard and diligently to bring us to this position. Going forward, the board will ensure that it provides oversight to the management team to ensure that the organization maintains its stated goal of being a purpose-driven institution. Pursuing the digital transformation agenda, the board will also continuously assess the interests of our various stakeholders and proactively ensure that all these needs are taken into consideration in our strategic plan. Let me take this opportunity to thank all our stakeholders for your support. A special thank you to the management team and staff led by our Group Managing Director and CEO, Dr. James Mwangi, for your commitment and passion that has enabled us to continue creating value for our stakeholders and has enabled us to become a leading player in wealth creation and transformation of lives and livelihoods. I also extend a big thank you to the entire board of the group and all subsidiary boards for your dedication and commitment that has enabled us to continue delivering positively on our mandate. I thank you all. Shareholders, I now invite the Group Managing Director and CEO of the company, Dr. James Mwangi, to introduce the management team and to brief the shareholders on the year under review and the future prospects of the company. Dr. James Mwangi.
Thank you very much, Mr. Chairman. Shareholders, colleagues, ladies and gentlemen, allow me to take a few minutes to introduce the team that leads the 8,500 members of staff, and that has worked tirelessly throughout the year ended 31st December 2020 to bring us to where we are. First, Mary Wamai, your Group Executive Director, long-serving Director of Strategy and Company Secretary before becoming Executive Director. Next, Polycarp Igathe, Group Chief Commercial Officer, who leads our interactions with our customers and our growth initiatives. Next, Joy Benedetto, Group Director Communications, who helps us to speak out to our shareholders, our customers, and the general public. Next is Basimisebi Lanre, our Group Director, IT and Operations. Shareholders, you may notice that following the very successful digitization of our operations, we have merged now operations with IT. Our shareholders, next is Elizabeth Gathai, previously Group Director Credit, and now heading digitization and automation of the entire credit process and operations. Brent Malhai, shareholders, a director who interacts with you quite frequently, in charge of strategy, strategic partnerships, and investor and shareholder relationships. Gloria Mugisa, our Group Chief Human Resource Officer, who takes care of our human capital. Sam Gitwekere, who joined us recently to strengthen our directorate of credit, performing as the Group Director, Credit Risk. Next is David Gata, our Group Finance Director, responsible for maintaining our accounts and records. Next is your Company Secretary, newly appointed Lydia Dilango, who joined us last year. The long-serving Group Internal Auditor, Bildad Fuaba, who ensures the risk environment is controlled. Janet Maige, our new Managing Director of Xenia Technology Limited, the arm of the group that is helping us to really become a technology platform following very successful digitization of our operations. Last but not least, shareholders, is Angela Okinda, a new Managing Director, Equity Insurance Services, following your resolution to support us to set insurance business. Shareholders, I may want to draw your attention that we are not just a purpose-driven organization, but we consciously, deliberately try to create an equal opportunity environment in Equity Group. And as you might have realized, we are 12 of us at executive management, and 6 are male and 6 are female, confirming we have created an equal opportunity environment in Equity Group. Going to the year that was 2020, shareholders, this year could only be compared to the year 1919, when the world experienced a global health crisis of the same magnitude. And this was a great health crisis which quickly mutated to become a great multi-crisis, starting with health, where we have seen across the world up to 151 million cases of infections with 3.2 million deaths, showing the gravity and the significance of this crisis from a health perspective. But that has quickly turned into an economic crisis, and we saw very poor performance of the world economy. But we are optimistic that with the manufacture of vaccines, there is hope that the world will be able to pull through this crisis. However, the trading effect and of the devastating effect of economic disruptions of livelihoods, loss of jobs, and health challenges remains a significant impact. And this was the environment which the results of 2020 are registered. This COVID-19 risk exposed the group to four major challenges that kept us awake. The first one was the quality of our assets, and particularly the loan book. And here the risk was provisions and write-off, as those disrupted by the crisis being unable to continue to do business, and hence leading to provisions. Capital erosion, particularly with provisions, and threatening the license risk on the basis of non-compliance. All the provisions and write-offs would be made against the capital base. The third challenge and risk that we had to manage throughout the year was the liquidity strain, the disrupted cash flows of loan repayments. The resource allocation within the marketplace suggested that we had to deal with uncertainty in terms of liquidity. And liquidity, as we all know, is the sudden cause of death in the banking industry. And of course, our brand reputation was dependent on our ability to keep our promise as spelled out by our purpose, that at all times we exist to change lives, to support livelihoods, to give dignity to our customers and our people, and more importantly, to expand opportunities for wealth creation for them. And living that purpose in a health crisis of the magnitude of COVID-19 itself was a huge challenge. And if we failed to live up to the promise, then the brand would have been irreparably challenged and destroyed. And equity's biggest value, it is trust capital. So those were the four major challenges that kept management awake. And I want to share just briefly on how management strategy responded to these challenges. And the first one, as spelled out by our chairman, was to strengthen our capital buffers, because that is where risk was backstopped. And this involved growing our retained earnings. And the shareholders, as you are aware, the board in its wisdom felt appropriate to withhold a dividend of 2019 and not recommend dividend for 2020 to ensure capital was buffers were maintained to a level that they could absorb any risk that would materialize. The second measure was strengthening liquidity, ensuring that we grew our deposits, and we alleged for credit facilities to backstop any cash flow leakage that arose from rescheduled loan repayments. We focused on strengthening leadership and creating a very strong market presence and visibility to assure our customers we were together with them, we were working alongside them, and we were committed to work and navigate through the challenge with them and make it easy for them to quickly recover. Of course, following IFRS 9, we had to assess the long-term effect and lifelong risk of default on our loan book. And shareholders, our assessment was that out of the 530 billion shillings we held in our loan book, we estimated 27 billion would be challenged. And as a result of prudence, we had to make a provision of 27 billion shillings, equivalent to about 3 years dividend payout based on the 2018 dividend payout of 9.5 billion. And so effectively, the withdrawal of dividend was to backstop this risk and ensure that it didn't impair the strength of the group and its ability to continue to grow. The other approach was to build resilience by strengthening our trust, reputation, building around the brand, and particularly at a time of crisis, starting with the community. And I'm glad to say the group invested 1.7 billion shillings to protect and support the community, particularly the Wings to Fly kids, to take care of them throughout the year of crisis, to protect the doctors, the nurses, and clinical officers in our 58 referral hospitals that were dealing with COVID, and supporting the government of Rwanda, DRC, and Uganda in management of COVID, being there with the community and building the trust that has always existed between Equity and our host communities. And of course, on a day-to-day basis, adopting a crisis leadership style of leadership visibility to offer confidence to staff, our market, our customers, and our shareholders, and effectively communicating regularly to all the stakeholders. We took to, while we focused on being defensive, we also felt that a strengthened company was also good for growth. So we took a twin approach, a defensive strategy to protect the company, but also to take advantage of the environment and grow. And as people say, turn the crisis into a good crisis and not waste it. So we adopted an offensive strategy that focused on capitalizing on human behavior changes to reposition the business model of adopting digital channels. We realized society, humanity, out of fear of COVID, had changed their behavior. And quickly, we asked ourselves, how could we position the group to align itself to the new behavior? And I'm glad that that change of behavior acted as a tailwind to our digitization. And at the end of the year, we stood a significantly transformed group with 98% of our transaction being on outside our premises. We strengthened our partnership with third-party and variable cost service providers to ensure convenience to our customers. And we also then thought, having built a very strong trust brand and build strong trust capital with the community, we could be able to turn that into business. And I'm glad to observe that the market rewarded us by getting our total assets to grow by 51%, led by a 53% growth of customer deposits. The customers voted with their accounts as a reward to the trust and the confidence we had demonstrated to them. And lastly was converting the crisis into an opportunity. And we utilized the strength and enhanced capability to seize the opportunities. And we acquired BCDC in DRC, enhancing our economies of scale. The offensive strategy led us to be the number 2 largest bank in our 2 largest markets, and paved the way and prepared the group to have sight of being the largest bank in those 2 markets, preferably this year. Regulators, governments, and partners were not left behind. And we really observed keenly how everybody was acting. And we saw the government created a framework that made it possible for us to execute on all the initiatives we had made. And we saw the opportunity of collaboration, partnership with the government, and like-minded members of community and society to work together and giving us an opportunity to work together. And as a result, we saw a lot of social impact investments complementing government's efforts against its initiative. And on the health response, we invested close to 1.5 billion shillings in giving waiver for transaction fee for our customers as an incentive for them to go digital and be able to comply with the health protocols. From a social perspective, our response was really in contributing 1.7 billion shillings with partnership of Equity Group Foundation, MasterCard, to ensure that we reduced the pain of those who got the infection. We restructured up to 31% of our entire loan book of 171 billion shillings to give room for our customers to be able to repurpose their businesses, to navigate the market adjustment, and more importantly, we waived an amount of 1.2 billion shillings out of the fees for loan rescheduling. We strengthened our capital buffer significantly, and shareholders will forever be grateful for your understanding. We knew it was a huge sacrifice for you to forfeit dividends for 2 years. But as you might have established in my previous slide, the provisions that we had to make to ensure we protected the quality of loan book was equal to 3 years of dividend payouts. And as a result, that final residue risk hit the shareholders' funds in terms of retained earnings. And we could have been in non-compliance with the central bank requirements if we had not made that proactive decision. On terms of risk management, we developed very strong frameworks, proactively managed credit proactively managed liquidity risk, and proactively managed management risk. And lastly was liquidity buffers. We knew we had rescheduled that 1% of the entire loan book, 171 billion shillings. And we had forgiven repayment of both principal and interest. And that meant cash flows from loan repayments were impaired to the magnitude of the monthly installments. And to forestall any liquidity challenges, we sourced $380 million, nearly 40 billion shillings, to forestall any liquidity challenges and to strengthen our liquidity during crisis. We maintained our strong investment in shared prosperity with the society, stepped our effort to support community, whether it was in education, in financial literacy, in agriculture, just to ensure that we kept the lights of our economy on, because it's the economy that provides opportunities. We needed to ensure our customers survived through the crisis. We wanted to reduce pain to them. We wanted to ensure those who had established enterprises were able to maintain their staff and to look after their families. And this was all done in terms of social impact. An organization can never be better than its leadership. We felt the crisis gave us an opportunity to strengthen our leadership. It exposed what challenges were ahead of us, and we realized the credit was the greatest challenge. And we strengthened our credit team significantly to be able to manage this crisis by bringing on board highly experienced people to deal with that challenge. We strengthened our risk management and compliance department because we were dealing with multi-crisis risks, whether it's liquidity, whether it's capital, whether it's operations, whether reputation, and we needed a strengthened team. But we also strengthened our IT and operations department significantly to ensure that we were able to tap and take advantage of society and communities' behavioral change, particularly in adoption of digital lifestyle. We strengthened the governance structure, as the chairman has said, and we have continued. And I see before you amendments to our articles of association to continue to strengthen our governance structures. And as a result, we came out of this crisis a much better bank, a much more resilient bank in its ability to use governance structures to mitigate and to manage challenges along the way. As we said, we were very offensive. We maintained a steady focus on the region that allowed us diversification. And as we have observed earlier on, Equity BCDC became the second largest subsidiary within the group and the second largest bank in DRC, giving us two areas of presence as the second largest bank in the two largest markets we operate in. We monitored management of performance, and we observed significant improvement on our subsidiaries, pulling out together to make significant contribution and to diversify the sovereign risk of concentration that has existed before. So we are satisfied with the performance of Uganda, the performance of Rwanda, and very strong signs of performance that DRC has started to show as we saw Kenya start to bounce back to its heydays when it was an outlier in every sense. Looking at the geographical expansion, we realized that while it took Kenya 16 years to breach the 4% return on asset, we saw Uganda able to breach that record and reach a 4% return on asset within its 14th year. We saw Rwanda tending to make that breakthrough in 12 years. And with the experience that we have learned on those subsidiaries, we are confident that DRC is poised to maybe break that barrier within its 8th year. Looking at the region, we saw very significant positive trends, giving us confidence as to how the future is likely to look like. We saw huge productivity gains in the subsidiaries. We saw Kenya taking a lead in access to infrastructure and hoping and believing that the path Kenya has taken is what the other countries will take. We can only look for better days. We looked at the development of infrastructure in the region, and we felt confident that the investments had been made at the right time, and we are likely to take full advantage of the trade routes given the evolution of the trade treaties, particularly the African Continental Free Trade Area, the East African Community, and we saw the law that Kenya and Tanzania would play to access the Hinterland, and reaffirmed the decision that we had made earlier of investing in the region. When we did a big deep dive on individual countries, we saw that the foresight on investing in DRC, we may not have had all the facts then, but the intuition has been validated by the transformation we are seeing in DRC. And shareholders, we are, as management, we are very confident that DRC will be an outlier within the group in the medium term. We observed the transformation Uganda is going through, the opportunity Uganda is going through, and again, it brings on diversification. And for the first time, we'll be doing business in a country that is a producer of oil and gas, and again, giving us an opportunity to diversify our business. And particularly, oil and gas in Uganda will weigh the national resources of mining in DRC and diversify. We were drawn to the attention of Tanzania, a country that our shareholders, you know, we have struggled, but Tanzania seems to be promising in terms of a changing environment, and we are optimistic that it will join the fold. But it's our positioning in terms of a group proactively investing and predicting the future. When COVID came, it made online businesses a must because of the need to avoid touching services, the need to stay at home, the need to social distance, and the need to observe great hygiene. And as a result, online business was really the ultimate solution. And we were very well prepared, and shareholders, we saw a significant takeoff of our digital banking, and digital banking becoming home to 98% of all the transactions happening in the bank, irrespective of the value of the transaction. For the first time, shareholders, we saw volume handled by the digital bank being almost 800 billion shillings higher in terms of value than what was being dealt with by the traditional, or what people would call legacy infrastructure. But it is a critical evaluation that revealed to us that the value of transactions were mainly done on the digital channels, the variable cost channels, and self-service channels, with the channel of EasyBiz, the online cash and liquidity management, recording a 58% growth in volume of value it transacted. EasyPay, or online cashless transactions in the retail outlets, growing by 88%. Of online forex buying or trading, growing by 158%. The Easy app, those who were on the app, increasing the volume of their transactions by 77%. And even the Equity STK, Equitel, growing the volume of transaction by 50%, a great indicator of preparedness before the crisis. And we saw that also steady growth in digital payments. We saw very steady growth in remittances, which are all digitized. We saw significant growth in forex trading from a digital platform. And we knew for once the online digital bank had been validated, and it's the bank of the future. And now we are confidently investing, taking advantage of the first mover advantage. And shareholders, over the last 1 year, we have observed that we have increased our market share by 200 basis points in the entire market. So suggesting we are significantly consolidating the market because we have the preferred banking model, banking channels, and banking solutions or financial solutions. We did a lot of work, as we said, in managing rescheduled loans, and asset quality kept us awake through and through. And shareholders, you can see the distribution of our assets alongside the subsidiaries, alongside the country, the currencies, and alongside the sectors. We are confident about the diversification of our loan book, and that explains why our asset quality and distribution and risk mitigation allowed us to operate 300 basis points, over 300 basis points below the average of the sector in terms of NPL. Shareholders want to observe that we have leveled out in terms of NPLs, and with the steady focus on growth, we are confident we'll start now seeing a gradual decline in NPLs. Shareholders, I want to confirm that the 11% loan book that is in stage 3 of non-performance is significantly provided for, 87% of it in terms of provisions, and a significant portion in terms of credit risk guarantees, giving us a 99% coverage, suggesting that for the 60 billion shillings that we had to provide for, which is in NPLs, it is adequately covered. The 27 billion shillings provisions give us a cushion that we don't have legacy issues to deal with. We can only deal with new risks within new loan book. So we are confident about the future. We're also confident, shareholders, about the rescheduled loans and the way they are falling in, and we are confident that we'll focus on managing the rescheduled book. It is structured. We have broken it down when each of them is maturing, and we are very confident that for the 40 billion that has added its period of accommodation, 95% of it is performing. And for the 5% that's not performing, it's fully provided for. Dear shareholders, would like really to draw your attention to our balance sheet, which reflects the asset base of the bank. And with a lot of humility, deeply appreciate the support as a group we got from our customers. The investment in building trust with our customers turned to be our biggest protection and cover during the crisis. The market and our customers perceived us as the safe harbor in times of turbulence. And as a result, we saw our total assets grow by 51%, strongly driven by a 53% in customer deposits. That trust, that confidence is the biggest asset this group have, and I'm glad that we have the social arm, Equity Group Foundation, that is continuously investing in shared prosperity to align our interests with those of the customers and with our host communities. We'll continue to strengthen this board so that at challenging times, we'll always know we have customers and a community and a public that we can count on to work with us through difficulties until they are challenged. Dear shareholders, that growth in itself, and I want to draw your attention to the structure of the growth. If you look at the asset mix, shareholders, you will appreciate that customers' deposits during the year grew by about 53%, but shareholders' funds grew by 21%, while borrowed funds or lenders' funds grew by 63%. Shareholders, it's a very humbling moment when others give you more than you are able to build. And this is the challenge that made us recommend to the board to consider very carefully dividend in 2020, because the growth of 53% of customers' deposits needed to be leveraged and needed to be supported by shareholders' funds. But shareholders' funds, because of provisions, were growing much slower than the growth in deposits. And if dividend had been proposed, we knew we could not have got approval from regulators because the bank was growing much faster than shareholders' funds were growing. But shareholders, we are confident that bouncing back to performance will be able to bridge this gap and grow our shareholders' wealth much faster and be able to provide for dividend and also support growth. We are supportive shareholders as management of the policy that the board enacted, requiring to match growth and distribution of dividend to shareholders. And we are confident that going forward, starting with this year, we'll be able to comply with that policy. Shareholders, looking at our profit and loss or income statement, I just want to draw you to one line of loan loss provision. The loan loss provision grew from 4 billion in 2019 to 26 billion shillings, suggesting the increase was 22 billion shillings. If we added the 22 billion that we believe was a one-off COVID necessary provision, we could have added the shareholders with a profit of 44 billion shillings if it was normal performance. And 44 billion shillings would have compared with that 1 billion shillings the previous year. So we are confident that the engine we have built in terms of performance will be able to deliver on the dividend policy and ability to be able to further the momentum of growth that we see. Shareholders, looking at the financial issues, would like maybe to confirm the challenge we had in terms of core capital to risk weighted. And we can see shareholders, when you look at the bank level, 2019, the core capital to risk-weighted asset was 13.1, but by 2020, that had come down to 12.4%. At total capital to risk-weighted assets, the ratio had dropped from 17.4 to 16.2, and if you look at the group level, the ratio of core capital to risk-weighted asset had dropped from 16.3 to 14.8, while total capital to risk-weighted asset had dropped from 19.8 to 18.9, which was the greatest indicator to regulators that the group needed to conserve its capital, strengthen its capital buffer, and that was the basis upon which the directors didn't recommend a dividend for this year. But shareholders, let me end up by making an outlook into the future. Looking at the numbers and simulating, we are very confident that as more data keep on coming, we are becoming increasingly more confident. And we have revised our original outlook at the beginning of the year and revised it as at March. And we are confident that we will still be able to outperform that revised outlook. So we want to give you confidence that we have navigated the turbulence pretty well, and with the 27 billion shillings provisions, we are confident that we have bounced back to our past, that from 2005 when we listed, we have never missed a dividend payout. I think looking at the data of performance trend, just to share with you where the confidence of the forecast is coming from, we are seeing that the bank since 1991 up to 2011 had maintained a tenfold growth every 5 years, a compounded growth rate in excess of 200%, maintained for a period of 20 years. The last, from 2011, we saw the bank doubling every 5 years. We are now confident looking at 2016 to 2021, the bank will more than double during that period, suggesting the momentum of the bank has continued to grow. We are confident the market has taken sight of this, and shareholders would like to draw your attention not just to what is happening to the market in terms of deposits, but more importantly, by the stock exchange. And we are seeing how the price. I know we have missed dividend shareholders, but if you look at the price of our share as at 31st December, it was 36 shillings. As we speak, it is now almost 46 shillings. Each share has gained in market capitalization 10 shillings. We may have missed 5 shillings in dividend for 2 years, 2 shillings and 50 cents, as had been proposed by the shareholders, but we have gained 10 shillings. And consequently, as the saying goes, he who laughs last laughs loudest and longest. We have protected the business, and we are back on track of performance that is consistent with our proven track record. Thank you very much, shareholders, for the opportunity to speak to you this morning. And Mr. Chairman, thank you for the opportunity you have given management.
Thank you very much, Dr. James Mwangi, for that presentation. Shareholders, the director's report was also circulated with the integrated report, and it is contained on pages 114 to 116. With your permission, we shall take the report as read. I now call upon Mr. Richard Jeroge, our external auditors, to read the auditor's opinion, which is part of the auditor's report, appearing on pages 121 to 125 of the integrated report for 2020. Mr. Richard Jeroge.
Thank you, Chairman, and good morning, shareholders. I confirm that we have audited the financial statements of Equity Group Holdings PLC and issued an unqualified audit opinion that is contained on pages 121 to 125 of your integrated report. I will now proceed to read our report to the shareholders of the group. We have audited the accompanying financial statements of Equity Group Holdings PLC and its subsidiaries set out on pages 126 to 239, which comprise the consolidated statement of financial position at 31st December 2020 and the consolidated statements of profit or loss, comprehensive income, changes in equity, and cash flows for the year then ended, together with a separate statement of financial position of the company at 31st December 2020, and the statements of profit or loss and other comprehensive income, changes in equity, and cash flows of the company for the year then ended, and the notes to the financial statements, including a summary of significant accounting policies. In our opinion, the accompanying financial statements give a true and fair view of the financial position of the group and of the company at 31st December 2020 and of their financial performance and cash flows for the year then ended in accordance with international financial reporting standards and the requirements of the Companies Act 2015. In our opinion, the information given in the director's report on pages 114 to 116 is consistent with the financial statements. In our opinion, the auditable parts of the director's remuneration report on pages 117 to 119 has been properly prepared in accordance with the Companies Act 2015. Signed, PricewaterhouseCoopers LLP, 29th March 2021. This brings me to the conclusion of the auditor's report, and I now hand back the proceedings to the group chairman. Thank you.
Thank you very much, Mr. Jeroge. Shareholders, as you are all aware, shareholders were given an opportunity to ask questions and seek clarifications prior to this meeting with respect to the financial statements and the resolutions contained in the notice and agenda of this meeting. Responses were provided to shareholders who asked questions and sought clarifications prior to the AGM. The responses have been uploaded on the company's website. Having said that, we will provide an additional opportunity to the shareholders who have pressing questions to ask them using the question button on your streaming device or via the mobile phone USSD code, which should appear on your screen. Please note that we will try as much as possible to respond to your questions, but due to time limitations, we may not adequately address all of them. Therefore, all questions received will be collated and the responses will be published on our website after the meeting. Shareholders, let me now invite those wishing to call in with questions to proceed and dial in. Shareholders, our lines are now open. Those who would like to ask any questions or clarifications, please dial in. This appears to mean that all questions that you may have wanted to ask have already been answered. Oh, yes. All right. Hello.
Hello?
Yes.
Yeah, Mr. Chairman.
Yes, please.
Do you hear me?
Yes, I can hear you. Please say your name and where you are calling from, and then ask your question.
Okay, my name is Irungu Kimani from Pika.
Yes, Irungu.
Yeah, I have 2 comments and 3 questions. And,
could you please, Mr. Irungu, keep them short because we want as many. So may I request that maybe you make 1 comment and ask 2 questions so that we have as many shareholders get the opportunity to also ask.
I will do, Mr. Chairman.
Thank you.
And first, it's a commendable job that you have done. Since I have seen the deposit have already rise up from the 2019. So this is a confidence from the shareholders and the customers that your bank is good. Question, Mr. Chairman, on dividends. I would like to say that I have met with so many shareholders, and they say to me, because I only ask a question, the next year you can consider to give us dividends, because this is a 2-year drought of dividends. Another question that I have is about the share premium and the retained earnings. If I can see, you can do something to either to improve the share capital or to give a spread, because it is a good thing that you have done to this annual account, and shareholders are happy with this account. Let me tell you the truth: the shareholders are happy with this account of this year. The final one is about these NPLs. The NPLs, I would like to say that because this is the money that the customers have, you can go slow on receiving that money, because here in Kenya the economy is not good. So wakati mnaletewa pesa, msiwaharakishe sana, mnawaleta polepole, wanalipa polepole, because hiyo last year na this year kulikuwa kubaya juu ya hii COVID. Thank you, Mr. Chairman.
Thank you very much, Mr. Irungu. We shall soon be answering your questions. Thank you. Yeah. Hello, good morning. Hello.
Hello, good morning, Chair.
Good morning.
My name is Sally Chipkorir, and I'm a shareholder of Equity Bank.
Yes, Sally, go on. Where are you calling from?
I'm calling you from Nairobi.
Yes.
Yes, Mr.
Go
Chair,
on.
allow me to say this.
Yes.
Allow me first of all to thank you first of all for having me, and I also want to welcome you on board to Equity family, where
Thank
we
you.
embrace people with brains. I want to embrace the board of directors for seeing it prudent to see you prudent to be our chair, so that you can instill your brain in this company. And allow me also to embrace the board for choosing the best brain to chair this precious organization. We are really contented with you, and we believe you are going to bring wealth of experience to this Equity Bank. Thank you, our CEO, for being the best and bringing the best incredible minds to head this team. Now, I want to go straight to my question. Question one is this: what is your take on the role of equity in entrenching sustainability in the business going forward? Question two: what role does equity play in building capacity for the youth, since building economy is not a walk in the park? Then question three: last year was a bad year for banking sector due to COVID-19 challenges and unperforming loans that affected their profitability. What is your take this year? Is profitability likely to increase? And then finally, Mr. Chair, I want with sincere mind and humble spirit to laud the gifted intellectual capacity of Dr. Mwang. Indeed, he is one of a kind. Let me appreciate him in a very special way, because he did a very incredible deliberations. We are really satisfied with this being the CEO of this bank, and we pray that God may continue to sustain him together with the rest of the board of directors and management. Thank you very much, and be safe.
Thank you, Stanley, for your compliments and your questions. We'll be answering your questions shortly. Hello.
Hello, good morning.
Good morning.
This is Chami speaking from Busia.
Yes, Johnny.
Now, let me first of all commend our MD and the Chief Executive and all the board members and management of Equity. Now, my question is, we have not had dividends for some years. As a bank, what measures are you taking so that in the future we can get dividends?
Thank you. Thank you very much, Annie. We will be answering your question shortly. We have a few more minutes, shareholders, to take one or two more questions. Thank you. I think now we will maybe close this session. We will answer your questions shortly. And we will also answer some questions that have been streamed by some shareholders who did not call, but they have sent questions during this live session. Thank you. You'll now have a video played to guide you on how to vote as we before we come back to answering the questions. Thank you very much. Ladies and gentlemen, we will now respond to the questions from the shareholders who called into the meeting. We have also received questions from the live stream, of which we will also respond. We will start with a question from Mr. Irongo in Thika, and who asked about whether next year there will be dividends. He also wants to know whether we have considered split of shares in view of the non-payment of dividends. And he also wants to request whether we can go slow on customers whose loans are not performing. I'll request Dr. James Mwangi to respond to those questions.
Thank you very much, Mr. Chairman. And Mr. Irogo Kimani, on the first question for dividend for next year, looking at the performance of the first quarter, where profit after tax grew by 63%, that is a great indication of how next year is likely to be in terms of dividend payout. As we said, this year's constraint is not the quality of the loan book. We don't anticipate any scaled up provisions. The only capital we require is to maintain the capital ratios because looking at the first quarter, the business has sustained the same momentum of above 50% growth rate. And that growth rate in deposits, growth rate in risk-weighted assets will require to continue to be funded by shareholders in terms of improving the capital ratios. But we are doing a deep dive and analysis suggests that the newly enacted policy of paying a minimum of 30% of profit after tax will easily be accommodated within that profit growth rate. I may also add that management really has been put on notice that since they have to pay 30% minimum of profit after tax, if they see the bank is growing faster than can be funded by internally generated funds, they have no recourse to the proposed dividend or guaranteed dividend by policy. They would have to come to the shareholders with a rights issue. So it will now be the shareholders who make that decision. On the issue of bonus and splits, Mr. Irongo Kimani, it's the tradition of this bank. And if you look at the slide that we posted on wealth creation for shareholders, any shareholder who had one share in the year 2000, they got a split of 1 to 3 in 2000. For every share they got 3 split shares in 2000. In 2004, a bonus was issued of 5 shares for every 1 share held. The same was repeated in 2007. Another bonus was made of 3 shares for every share held. And in 2009, another split was done of 10 shares for every share held. And as a result, any shareholder who had 1 share in the year 2000, without buying any more shares, they now have 600 shares. And that share, which was valued at the marketplace 20 shillings, then now the value of the 600 shares, as we saw at the rate of 45.55, gives significant growth in value of shareholders, giving us a growth in terms of wealth for the shareholders to the magnitude of 136,550%, suggesting every 1 shilling that one had invested in 2000, it's now 1,367 shillings. And that is the power of bonuses and splits. And I'm sure your board have had, and based on the analysis and advice of consultants, will weigh and make the appropriate decision. As regards NPL going forward and going easy, Mr. Kimani, thank you very much for sharing with us the empathy that we have of customers who have supported us this far but are going through difficult times. As we earlier said, we accommodated 31% of all customers with loans of 171 billion shillings. And we accommodated them for the periods that we agreed their businesses were likely to be affected. That has continued to happen, and we have showed you the schedule with some of the loans given a repayment break of up to 3 years. But it's important to point to you that we have received an advisory from the regulators that we shouldn't be accommodating more COVID-related cases in terms of loans, and that we should now classify those loans. So accommodation now will be met and accompanied by provisions because it will reclassify those loans that show stress. And that is why loan management, and particularly the accommodated loan, has become the central focus of management to support our customers to be able to pay their loans, and where they are not able, to look at means that we can accommodate them while taking cognizance that that accommodation will require reclassification and provisioning by the bank. Thank you, Mr. Chairman.
Thank you, James. We will go now to the questions asked by Saleh Koril in Nairobi. And Saleh has 3 questions, and one is to do with what we are doing to maintain business sustainability. And the second one is what we are doing in building capacity on youth. And the third one is on profitability trends for 2021. Again, I'll ask James to answer those questions. He may have touched on the last question while he was answering the question on dividends. James, go on.
Thank you very much, Mr. Chairman. Saleh Khalil, thank you for great 3 questions. On sustainability of business, we have come to realize that businesses that put purpose first stands a better chance of being more sustainable. And as a result, we have strengthened significantly the role of Equity Group Foundation, the social arm that propagates shared prosperity between the internal stakeholders and our host communities. We have scaled our operations, and the chairman are dedicated. We took a 5-pronged approach in supporting community last year, whether it's from a health perspective, from a social, from an economic perspective, from an environmental. And as a result, this is driving significant trust capital with the communities. We want to attribute the 51% growth in our assets during a global health crisis to the trust that community have bestowed on us. And trust is the most powerful asset when sustainability comes into being. But being aware about that trust, we have felt that trust is not enough, and we need also to protect the environment within which we are operating and within which we are enjoying that trust. And sadly, we now have devoted our efforts to protect the environment by planting 35 million trees to celebrate our 35 years of existence. I'm glad, shareholders, to say we have now planted nearly 6 million trees within 2 seasons. And so that increasingly is increasing our investment in society, we're increasing significantly shared prosperity, impact investment, social investment in society, for we have realized that is the most sustainable way an organization can do business. Sally, it will be good for you to know that this year we are celebrating what is commonly referred as the Business for Peace Nobel Prize. We have been named as the Oslo Business for Peace awardee for the year 2020. And that really speaks about coexistence with the community, harmony with the community. And there is nothing that can be more stronger as a base of sustainability than trust and peace. When it comes to the youth, sadly, we are aware that a community that doesn't invest in its youth is busy destroying its future. And we have decided to role model society by focusing on our youth. The Wings to Fly program and the scaling of the youth program using the Elimu scholarships by the World Bank speaks of our commitment, not just to the youth, but in investing in future leaders. The Equity Leadership programs takes the best girl and the best boy in every region that we operate, and that totals about 700 kids every year. We give them internship in the bank, we work with them while in university, we seek international scholarships for them, and I'm glad, Sally, to let you know that this year our international scholarship program has earned 121 of our scholars opportunity to go and study abroad. The second aspect we have taken on youth is in financial literacy and entrepreneurship training. And over the last 5 years, Sally, we have been able to invest a 13 weeks financial literacy training program on 2.2 million youth in this country, composing of young men and young women, so that we can give them an opportunity to be involved in economic activities and to give them an opportunity to create wealth for themselves. And lastly is our investment in the bank. Over the last 3 years, we have won the Bankers Award of the most promising young bankers for 3 consecutive years without missing. Again, suggesting we are not just investing in the youth out there, but we are significantly investing in the young people in the bank as our future leaders and the successors of the current leadership. In terms of increasing profitability, as the chairman, we've dealt with that question, but what will drive profitability most this year is growth. The 51% growth in assets last year has given us an opportunity to deploy that growth assets into earning assets this year. And that will drive maybe profitability to an assured rate of maybe 50%. The second one is using economies of scale, the size of above a trillion shillings balance sheet to reduce our unit cost. And I'm glad, shareholders, to note that the trend that we started last year, where cost-income ratio declined from 51% to nearly 47%, has continued. And we expect, hopefully, this year to register a 45% cost-income ratio. And that widening of the jaw, together with growth, is likely to sustain a profit increase throughout the year. Thank you, Mr. Chairman.
Thank you very much, James. Charlie from Busia and many other shareholders that have asked questions online, and those that have just streamed them have asked about the dividends. And I think this question has been covered extensively in Dr. James Mwangi's presentation, and also in answering the questions that have been asked during this meeting. Services to say, because Charlie is asking what measures is being taken, that the board have embedded a dividend policy that going forward we shall pay between 30 to 50% of the profits after tax as dividends. Of course, at any one time, we'll also take care of any other aspects of business that will be prevailing at that business at that particular time. But I think I do hope we have satisfactorily addressed this question of dividends. Dr. Mwangi has also shown the outlook for 2021, which shows good business trends, that we expect improved profitability, and based on that, we do expect to return to our policy of giving dividends every year. Thank you. I will now turn to some questions that have been sent. From Wanyoike Francis Kamau, his question is, what does it take for one to vie for the post of director? Mr. Wanyoike, there are various considerations when we choose directors for the bank. We have a committee of the group, a governance committee of the group board that goes through all applications for directors, and also nominations that are sent from various people. We mainly consider the skills mix that is required at any one time. We map out what does the board need, and depending on the current requirements, and also we project the future requirements of skills. We also consider age, we consider sex, and when we look at this matrix, then the board governance committee recommends to the board for appointment as a director, after which then we would bring the name of the nominated person to the shareholders for election as a director. What I would advise you to do is to send either your CV or the CV of any person that you think would make a good board member to the company secretary. We maintain a huge database of prospective directors, and then anytime a vacancy arises from the board, we go to that database. Thank you. And I think our contacts are on our website, and you should be able to get us through those contacts. The second question, which has been asked by Wycliffe Temesi Frederick, is, has Equity set in place mechanism for compliance with the Data Protection Act in view of the serious penalties for non-compliance? If yes, please explain. I will invite our director for the executive director for governance, Mary Wamai, to answer that question. Mary?
Yeah, thank you, Mr. Chairman. And thank you, Mr. Temesi, for that very good question. First of all, I would like to, on the previous question by Mr. Francis Kamau, just to also state that being a regulated entity by the central bank, Equity Group Holdings, the prospective directors are also subjected to vetting by the central bank. So central bank approval is also a critical component of qualification to be a director of the company. Now, on Mr. Temesi's question, I would like to just state that once again, re-emphasizing the values that guide equity in all its operations. One of the values is effective corporate governance, which we strictly observe as we conduct our business. One of the requirements for effective corporate governance is observance and doing business in strict accordance with all laws and regulations that apply to us as a business. In that respect, we have made it mandatory for us to observe all the laws and statutes that are in effect and all the regulations and the guidelines that are issued also by the regulators from time to time. This includes the Data Protection Act and any other laws that are applicable. I must also say that as an institution, we do not restrict ourselves to just the minimum requirements of the law. We also go out of our way to look at the global best practices and comply with those where they are applicable and where they are relevant to our business. In that case, then, we as a team are also looking at the provisions of the General Data Protection Regulations, that is the GDPR, and we are picking out the relevant provisions for implementation within the group. In addition to this, Mr. Temesi and other shareholders, we have also looked at the data protection regulations and incorporated the provisions in all our contracts where applicable for the protection of our customers and also of the business. In addition, the group has also appointed a data protection officer who is charged with the responsibility of ensuring that the group meets the requirements of data protection policies and the law at all times in all its engagements. Thank you very much, Mr. Chairman.
Thank you, Mary. Next question is from Esperance Kabalisa Gashomo, who has sent this question from Kigali, Rwanda. And the question is that I have changed my name. I lost contact with the agent through whom I bought the shares. And since I don't stay in Kenya, I struggle to get the status of my shares and wants to know how we can help. I will ask Lydia, our company secretary, to respond to Esperance.
Thank you, Chairman. And this one is a response to Mr. Gashomo or any other shareholder who may have any questions about the status of their shares or about the statements. For any questions that you may have on your shares or even on the register, we would like you to contact our share register, Peter Wanyoike, and his email is wanyoike.peter@equitybank.co.ke. And I will repeat, wanyoike.peter@equitybank.co.ke. In addition, as you're registering and on the notice, there's the email for any questions that you may have. And the email is eghagm2021@equitygroupholdings.com. This email is actually on the notice, and once you send it, the email will directly come to me, and I'll be able to assist you in terms of your shares and getting details about the share register. Thank you, Chairman.
Thank you, Lydia. The next question has been asked by two people, Godfrey Maina Kifocha and Samson Duranera. And the question is, why didn't you consider issuing bonus shares to shareholders? if dividends were untenable? Once again, I'll ask James to respond to this question.
Thank you very much, Chairman. I deeply appreciate this question from Samson and Godfrey. It is true that our splits and bonuses are occasionally used as substitute to dividend. Shareholders, wealth while holding shares can be accessed in two forms. Cash payout, what we call dividend payout. The second one is realization of appreciation in value, and that appreciation can be also be cashed out through the sale of the shares which are trading in the stock exchange. And ideally, the issue is when you don't pay dividend, can you give us shares equal to the dividend in form of splits and shares so that we can cash out? And this is truly a mechanism, and we have applied it, as I said earlier on, about 4 times in the last 20 years. And we have issued 600 shares out of 1 shares, either through splits or bonuses over that period. But it requires a lot of technical analysis, which we really did this year. And we considered that the dividend payout, for instance, that was withheld by the board per share was 2 shillings and 50 cents. The share as of today is trading at 45 shillings. So to be able to make it up just for the price of 1 share, it will require nearly 20 shares. And that is why in the past you have seen us do splits of 1 to 10, bonuses of 1 to 5 to compensate. But the ability to issue additional shares in form of splits and bonuses is dependent on the economic cycle that determines the demand and supply of your shares in the stock exchange. During the last 1 year, it was a very difficult time. The market was significantly depressed. So what we could have done with a split and is just to depress the market even further, because the supply of shares that we could have pumped into the market would not have been corresponded by demand. And automatically what would have happened is the share price would have collapsed. So the reason why it was not done, and this was the advice of the advisors, is the timing was wrong. The market could not be able to support sustaining the price proportionately to where it was. And we are glad that if you look at the appreciation over the last just 6 months, if we call it 6 months, the price has gone up by 10 shillings. So we were better off leaving the shares and split without bonuses so that we could match demand and supply. However, as the economic cycle keeps on moving, and maybe we go to a boom environment, board members would always consider whether the price that shares are trading at is too high, or whether it is better to give an opportunity to shareholders by increasing their shares so that somebody can encash for missed dividend a portion of their shares. So these are all factors, and I want to say they were deeply considered. A lot of analysis were done, but the board in its wisdom felt that it would be acting in the best interest of the shareholders if it didn't create a depression of the share price because of a supply of number of shares. Thank you, Mr. Chairman.
Thank you, James. The next question from Luce Kainyu Kubai is on her nephew was reading in KCPE and he applied for scholarship and no response has been given yet. What could be the problem? Again, I'll ask James to answer Luce and anybody else who may be having this problem. Thank you.
Thank you very much, Lucy, for an excellent question, which speaks to holding management to accountability for the responsibility they have. This year, we had 10,500 scholarships to issue to both the Wings to Fry scholars and the Limu scholars. We received 84,000 applications. So in the first place, it means for every 8 applicants, only one would get the scholarship. So that's the first rule. Out of the applicants, out of 8, only one. The process commenced about 3 weeks ago when the constituted community selection board, because the process we use is asking community to constitute itself through an election or appointment of 11 board members who receives all the application, sift through, shortlist the applications, then interview all the applicants, and then validate what the applicant said during the interview with the visits. We are in level 2 of the process. At the moment, they finished the interviews last week, and this week and next week, the process is of validating the interviews with home visit. And it's only after next week, but one, that then the boards will consider with all the information and grant. So no outcomes, no results have been announced, but it will be good if your nephew have not been contacted. The best thing is to go to the nearest branch where the application has been made. If you made it online, still go to the nearest branch so that if it was missed out, then you could be able to still have an intervention before the process is complete. But no results have been announced, so you can't conclude that your nephew has missed out in the process, Lucy. Thank you, Chairman.
Thank you, James. Next question from Isaac Washira Thadi. What informed the management and board to terminate the deal to acquire Atlas Mara banking assets in some African countries? I will request Brent Malley, Director of Strategy and Investor Relations, to answer that question. Brent?
Great, thank you, Chairman. And Isaac, thank you for the question. So just as a reminder to our shareholders, back in April 2019, we made an announcement we announced discussions to potentially acquire banks in 4 countries, in East Africa as well as in Southern Africa. In June 2020, we announced that the discussions had discontinued. So the reasons for this, you'll recall from our group MD's comments that as we entered the COVID environment in 2020, we put in place a number of measures specifically around the defensive approach we would have in such an uncertain environment. As part of this, we did withdraw the dividend, and consistent with the view to conserve cash as well as to conserve capital, we decided to discontinue the discussions around the acquisition of the 4 banks we were looking at. So hopefully this answers and clarifies that question. Thank you, Chairman.
Thank you, Brent. The last question is from Alois Wafula Chami. And Alois asks, what are the challenges facing the group business? Clarify how you would improve the group business. James, I think that is up your sleeves.
Thank you very much, Mr. Chairman. And maybe, Mr. Chairman, just before answering Wafula Aloy's question, allow me, Mr. Chairman, just to add a little bit of fresh on Washila Isaac Daddy's question. Brent has alluded that this decision was informed by the uncertainty. The COVID environment created significant uncertainty that we felt our primary obligation and responsibility was to protect business. It was to protect our customers. It was to protect community. And it's as a result that we decided, Isaac, maybe to pull out of the transaction, knowing that we had only one opportunity to steer the ship out of the storm. And the ship will be there for many years. And so the opportunities like we had got from the Smala will always be there, but we had only one opportunity to save our business, to protect our customers, and to keep the rights of the economies in which we operate on, so that we could assure our shareholders of the future. Going to Alois Wafula's question, as we said, the challenges that came out of COVID, most of them we have mitigated, and we are very confident, and that is why the business has bounced back, and we are confident about the future. That explains why we are reviewing our focus going into the future. But that doesn't mean there are still no challenges that we are facing. Challenges is part of the day-to-day management of this business, because banking is risk management. The main challenges that we are now facing is environmental challenges. We are living and operating in a very, very dynamic environment where we are seeing changes in regulation, changes in policies, amendments of law at an unprecedented level. And consequently, with that shifting environment every day, challenges have to keep on being overcome on a daily basis. We are seeing unprecedented level of technology advancement and innovation in that space is giving birth to very unique, disruptive business models that are now competing with us as opposed to the traditional competition that we were used on. Technology has also infused a different set and profile and basket of risk. As had been indicated earlier, risks like cybercrime have become a very significant risk that we have to keep on monitoring on movement on a second basis, fortifying the firewalls and to protect the business. And lastly, it is the question of activism communities. And we are seeing, and we have just come out of Kenya from an interest capping environment. And we are seeing a lot of activism towards regulations, and activism always end up with new regulations, and all these needs to be complied with, and compliance always bring challenges. So regulation, environmental changes are some of the challenges, Mr. Chairman, that are keeping us awake, and that explains why Alois, we are focused on strengthening our risk management framework so that we can mitigate against known and unknown risk and strengthening our governance structures to ensure the right decisions are being made whenever situations are created by such risk. Thank you, Mr. Chairman.
Thank you, James. Shareholders, I trust that we have now given adequate consideration to all matters contained in the integrated report and the questions raised by members. In addition to these questions that we have answered, we have received more than 100 questions, and the responses will be found on our website. We trust that you will visit the website, because some of those responses will answer the questions that you would have wanted to ask. We have now closed the question and answer session, and we will now commence consideration of the proposed resolutions. I just want to remind shareholders as we go into this phase that voting for the resolutions that we are going to go through will close by 1:30 p.m. today. Agenda 1 is to receive, consider, and if thought fit, adopt the audited financial statements and directors' remuneration report for the year ended 31st December 2020, together with the chairman's, directors, and auditors' reports thereof. I will request the company secretary to read out the proposed resolution with respect to the financial statements and to confirm whether we have a proposer and a seconder of the motion.
Thank you, Chairman. Thank you, Chairman. Shareholders, the resolution put forward to you is as follows: to receive, consider, and if thought fit, adopt the audited financial statements and directors' remuneration for the year ended 31st December 2020, together with the chairman's, directors, and auditors' report thereon. Chairman, Mwangi Paul Jomo has proposed, and Kimani William Kamiri has seconded the motion. Thank you.
Shareholders, the resolution to adopt the financial statements for the year ended 31st December 2020, directors' remuneration report for the year ended 31st December 2020, together with the chairman's, directors, and auditors' reports, has been proposed and seconded. I now put it to the meeting for voting. Agenda 2 is to note that the directors do not recommend payment of a dividend for the financial year ended 31st December 2020. I will now request the company secretary to read out the agenda item for the noting of members.
Thank you, Chairman. Shareholders, the director's recommendation is as follows: that the directors do not recommend the payment of dividend for the year ended 31st December 2020. Thank you, Chairman.
Shareholders, agenda 3 is to approve the remuneration of the directors for the year ended 31st December 2020. I now request the company secretary to read out the proposed resolution and confirm whether we have a proposer and a seconder of the motion.
Thank you, Chairman. Shareholders, the resolution put forward to you is as follows: to approve the director's remuneration for the year ended 31st December 2020. Thank you, Chairman. And Chairman, Kibor Sali Chepkoril has proposed, and Mwita Joseph C. Mathenge has seconded the motion. Thank you.
Shareholders, the resolution with respect to the director's remuneration report for the year ended 31st December 2020 has been proposed and seconded. I now put it to the meeting for voting. Agenda 4 is on the election of directors. The following directors are due to retire by rotation at this meeting and being eligible, offer themselves for re-election. Dr. Helen Geshohi, Mr. Vijay Gidmo. The profiles of the two directors are in the integrated report on page 241. I now request the company secretary to read out the proposed resolution with respect to this agenda and to confirm whether we have a proposer and a seconder of the motion.
Thank you, Chairman. Shareholders, the resolution put forward to you is as follows. To approve the appointment of Dr. Helen Gishoi, who retires by rotation in accordance with Article 100 of the company's Article of Association, and being eligible, offers herself for re-election. Chairman, Ngali Joseph Malasi has proposed, and Masharia Masi Wakonyu has seconded the motion.
Shareholders, the resolution on the re-election of the director, Dr. Helen Geshohi, has been proposed and seconded. I now put it to the meeting for voting.
Thank you, Chairman. On the second item is to approve the appointment of Mr. Vijay Gudumal, who retires by rotation in accordance with Article 100 of the company's Article of Association, and being eligible, offers himself for re-election. Chairman, Mwangi McClelton Moses has proposed, and Seeley Jackson Musili has seconded the motion. Thank you.
Shareholders, the resolution on the re-election of the director, Mr. Vijay Gidmo, has been proposed and seconded. I now put it to the meeting for voting.
Chairman, the next agenda item is for noting. To note the retirement of Mr. Joseph Newson, a director retiring from office by rotation in accordance with Article 100 of the company's Article of Association, and who, although eligible, does not offer himself for re-election. Thank you, Chairman.
Thank you, Secretary. Agenda 5 is to approve the election of the following directors, being independent non-executive directors and members of the Board Audit Committee, to serve as members of the said committee. Dr. Edward Odudo, Mrs. Evelyn Lutagwenda, Mr. Vijay Gidmo, and Dr. Helen Geshohi. The profile of the directors are in the integrated report on page 241. I now request the company secretary to read out the proposed resolution with respect to this agenda and to confirm whether we have a proposer and seconder of the motion.
Thank you, Chairman. Thank you, Chairman. Shareholders, the resolution put forward to you is as follows. In accordance with the provisions of Section 769 of the Companies Act, to approve the election of the Board Audit Committee members, Dr. Edward Odundo, Mrs. Evelyn Rutagwenda, Mr. Vijay Gudumal, and Dr. Helen Geshohi. Chairman, Washiuri Nancy Nyokabi has proposed the motion, and Mwangi Paul Jomo has seconded the motion. Thank you.
Shareholders, the resolution on the election of the members of the Board Audit Committee has been proposed and seconded. I now put it to the meeting for voting. Agenda 6 is to pass an ordinary resolution pursuant to Section 721 of the Companies Act 2015 to appoint PricewaterhouseCoopers LLP as auditors of the company and to authorize the directors to fix their remuneration for the year ending 31st December 2021. I now request the company secretary to read out the proposed resolution with respect to the appointment of the auditors and to confirm whether we have a proposer and a seconder of the motion.
Thank you, Chairman. Shareholders, the resolution put forward to you is as follows. To appoint PricewaterhouseCoopers LLP as external auditors of the company by virtue of Section 721 of the Companies Act 2015, and to authorize the directors to fix their remuneration for the year ended 31st December 2021. Chairman, Mushimi Edward Wahome has proposed and Cherotich Lydia has seconded the motion. Thank you.
Shareholders, the resolution on appointment of auditors has been proposed and seconded. I now put it to the meeting for voting. Shareholders, we will now proceed with special business of this meeting. The special business is with respect to the proposed amendment of the company's Articles of Association as set out in the agenda. I now request the Company Secretary to read out the proposed resolution with respect to this agenda and to confirm whether we have a proposer and a seconder of the motion.
Thank you, Chairman. Shareholders, the resolution put forward to you is as follows. To consider, and if thought fit, pass the following resolution as a special resolution as recommended by the directors. 1. To amend Article 1 and 79 of the Articles of Association of the company by the insertion of a new article, Article 79A of the Articles of Association of the company, to provide for the following. 1. The ability to nominate a director for any shareholder holding more than 12.5% of the company's issued shares. 2. Ability to nominate a director for the Equity Group Foundation. And 3. The appointment of executive directors. Pursuant to Section 22 of the Companies Act 2015, the text of the special resolution is set out as follows. 1. Amendment of Article 1 of the Articles of Association of the company by insertion of the following new definitions. The first one is the executive director. The executive director after the definition of directors. Executive director means a member of the board who is an employee of the company and also serve as a senior manager of the company and includes the managing director, and the term executive director shall be construed accordingly. Secondly, the Equity Group Foundation after the definition of board. Equity Group Foundation means a company limited by guarantee and incorporated in the Republic of Kenya with the company number C150117. Secondly, amendment of Article 79 of the Articles of Association of the company by insertion of a new article, Article 79A of the Article of Association of the company, immediately after Article 79 of the Article of the Association of the company. Article 79A will read as follows. Each shareholder be entitled to nominate for appointment in accordance with the process under applicable law and the company board charter, one director for each complete 12.5% of shares held by the shareholder in the company, provided always that the total number of directors so nominated for appointment by shareholders pursuant to this Article 79A shall not exceed 4 directors. The second part will read, the Equity Group Foundation shall be entitled to nominate for appointment in accordance with the process under applicable law and the company's board charter, 1 director. 3, the number of executive directors shall not exceed 3. Chairman, Muthimbi Francisca Wambui has proposed and Kitisia Benson Musili has seconded the motion. Thank you.
Shareholders, the resolution to amend the company's Articles of Association has been proposed and seconded. I now put it to the meeting for voting. shareholders, we have now come to the end of the special business. Voting will close at 1:30 p.m. and we encourage shareholders who are yet to exercise their voting rights to do so. The results shall be published within 24 hours on the company website. I will now ask the Secretary to confirm if there is any other business for discussion for which due notice was given.
Chairman, I confirm that there is no other business for discussion for which notice was duly given. Thank you.
There being no other business of which notice has been duly given, I take this opportunity to thank you once again for attending the meeting. That concludes the business of the 17th Annual General Meeting of the Equity Group Holdings, PLC. I will now request Bishop Kariuki to say a closing prayer. Thank you.
Thank you, Chairman. Let us pray.
Before Bishop Kariuki prays, I just wish to take this opportunity to acknowledge the support provided by Image Registrars Limited, represented by their CEO, Lawrence Kibet, who is here with us, for their work towards the success of this meeting. And I thank you for all of you for attendance and declare the meeting now officially closed. Over to you, Bishop Kariuki, to close with a word of prayer.
Thank you, and let us pray. Our Heavenly Father, we want to thank you once again for the wonderful time you have given us and a wonderful 17th Annual General Meeting that we have just concluded. We would want to thank you for the way you have worked with us as Equity Group, right from the beginning and over the years, that we have been able to register progress, growth, and expansion. We acknowledge that your hand has been upon us, and this is why you have continued to expand us even beyond our expectations. We thank you and we bless you. How we pray that, Lord, where we are is just a stage and not the final destiny. We want to pray that, Lord, you hold us by your right hand and take us through, that we may achieve even higher dimensions for the glory of your name. We want to thank you because of all the partners that have stood with us and contributed in one way or the other as we have propelled and have seen great achievements. We want to pray that even in the remaining part of this year, may you hold our hands and help us to achieve. May you open doors for us that we may be able to penetrate the territories that are right in our strategies. We thank you and we bless your holy name. Thank you for all the shareholders. May you continue blessing them and bless the work of their hands. Bless all our subsidiaries, that, Lord, we may see growth as they take the territories with the socio-economic transformation agenda for the well-being of your people in our region. We bless you and we thank you for this. We pray in your holy and precious name. Amen.
Amen.
Tunayo benki inayotufaa sisi wateja na wafanyikazi, tuko pamoja, lengo letu moja, kuyaboresha maisha ya watu, kujitolea kwa huduma bora, kuendelea kwa uaminifu, kuhudumia wote
Tuwe na shukrani.